let me ask you about, sometimes I see individuals that spend time in investment banking and doing numbers for big numbers. They overcomplicate the valuation of it. When you saw the valuation with the broker and you run 3 different methods to value the business, and it goes, no, that's not, somehow you make it in the middle. Like, what was that process like? Yeah.
That process was very funny, and I'd do it very differently now. I mean, so
did you overpay? Do you think you overpaid?
No, I don't. No, we didn't actually. We did all right. I think we did all right. And we did very well on the debt funding at that point, which is better than what most people were doing a couple of years after that, because the debt markets kind of changed a bit in the 3 years after. They're coming back now. So I think we did okay in terms of the pricing. But I do think that when I either think or look back at the kind of analysis that we did, I don't know if in the US you know Macquarie, but it's a very well-known investment bank here and does a whole bunch of very, very interesting and complex deals and has done many over the last few decades. And that was my background. And my business partner had come from PwC, PricewaterhouseCoopers, which again is a big global name, right? So, and he'd been spending his last 15 years doing a whole bunch of M&A deals globally, some of which we worked together on coincidentally, billion-dollar transactions, that kind of stuff. We brought that sledgehammer to. So
it was like I brought a nuclear bomb to a small.
Yeah.
It
was very funny, and so, but it was useful. I mean, we really did get under the bonnet of that thing. And so what I learned through that process is it's definitely important to know how to ask good questions and do good analysis. But you want to make sure that is fit for purpose to the volume and quality of the data that actually exists in the business. Like so often these small businesses, like they've got a certain amount of data and that data has a certain level of quality, but it's probably not the kind of quantity and quality that stands up to real deep analysis, right? Like it's not worth that much analysis.
But you can't do analysis unless you have something else to compare it to. Right?
Yeah. It's hard. So in terms of the valuation and the structuring, it was relatively simple. We paid a certain amount up front. There was an earnout over a 18-month period, I think, 3 6-monthly tests on earnings against which we would then make subsequent payments. So I think that structure was relatively simple and kind of still relatively normal for what we're seeing today in similar transactions. So yeah, we didn't end up overcomplicating it at that point. I mean, I often say to people, I really kind of enjoy the structuring piece. I think it's an interesting puzzle to try and solve. Like, how do you bridge that gap between buyer and seller through a transactional structure that actually manages risk on both sides? I think that's an interesting challenge. The challenge for me personally is not to kind of overcomplicate it just because I'm excited about it, because often you overcomplicate it to the detriment of the seller.
Yeah.
I hope this video has inspired you. If you need help buying your first $1 million business, make sure to visit me at dealflowsystem.net. If you like this video, make sure you subscribe down below. Comment on it, share it, tell everyone about it. And thanks for watching.